Firstly, welcome, Simon.
Hey Brendan, hello everybody. Welcome to the fireside chat.
We are talking about opportunity in uncertainty today. I guess one of the primary questions, who's feeling a little uncertain right now? Who's feeling it from the geopolitical environment, the war in the Iran, the war in Ukraine, interest rates and inflation issues? Who's feeling it? I'd like to suggest that there are many, many people feeling it. And what we'd like to do is talk about, well, what does that mean for us? What can we do differently for our own investing activity and success? We did have an event that occurred yesterday, for those who may not be familiar with it, the idea of a ceasefire in Iran and their promise to open up the Strait of Hormuz. That's good news. That speaks to the idea that perhaps we are seeing an element of calm and a return to normal, whatever normal is. Sure, dilemma you face is short-lived, 2-week promise, and already under threat. So that we're facing a continued environment of uncertainty. What does that mean in Australia? What does that mean for property prices? What does that mean for our investing and the decisions we need to make? There is, and it's been going for a little while now, and is likely to be going for a little while yet, a disruption. Consider it a disruptive window. So when all things are playing nice and calmly as we move along time, everything is wonderful, and we can then plan and map and coordinate and with confidence predict sales prices and negotiate buy prices. There's a common understanding around value, common understanding around cost for adding value, common understanding around rates of growth so that we can ride growth comfortably long into the distance and walk away skipping into the sunset. Wonderful. But we're not in that environment. And we have seen a lot of volatility in a lot of areas. And the consequence of that is as an aggregated group, we tend to freeze up. A lot of investors, particularly those who are centered on growth, go, no, don't think I'll invest for growth at the moment. I think I'll wait and see. But therein lies the opportunity. And that's what we want to talk about today, the opportunity that exists in disruption. All right, so Simon, tell me a little bit about where you see the opportunities, where you see we can do things differently.
Yeah, the key here is that you don't actually need real, genuine, hard bad news, like hard facts, to cause the market to behave in a certain way. It's really just having enough uncertainty out there from all the stuff that's going on that affects people's decision making, as you said, particularly investors who are looking to invest for growth, who are probably feeling the most uncertain right now. And that then affects their decision making. So that creates what we call a disruption window, or a window of opportunity, a time when a lot of people are unsure what to do, so they do nothing. Whereas the smarter, better informed, clear thinkers can then sweep in and take advantage of opportunities that'll emerge. So at times like this, where we've got these wild swings in the mood, going from yesterday where the financial markets go, it's a done deal, the war's over, oil price down, share price is up, to the very next day where it's like, well, maybe this is looking a little bit shaky now. And we'll see that uncertainty continue for a while. It's not going to go away anytime soon. So in that sort of environment of persistent uncertainty, what we've got to be is smarter than the average bear and be able to look through that noise and actually see the opportunity in all of this. And I reflect back a little bit, Brendan, to what we saw during COVID, where there was a lot of uncertainty, particularly if you were a growth investor. The expectations and the reality for a period of time was that prices fell generally, not everywhere, but generally. And because of that, a lot of investors sat back. They didn't know what to do. They didn't act, and that created huge opportunities for those who did act at the time. And we saw a number of our members, for example, make 6-figure, even 7-figure profits coming out the back of that, because they weren't just sitting on the sidelines while everyone else was freezing up. So there can be some really massive opportunities at times like these, and that's the mindset we have to go into this with. If we're looking at what this disruption looks like on the ground, we're trying to understand what are the signs we should be looking for. There are a number of things I think we can look at to spot this in the wild, so to speak. So, for example, you'll start to see, and we are already seeing, softer clearance rates.
I would like to suspect that everybody here who's attending here is seeing these changes already. There are those people who are into the market, and particularly results members, as we know, because we train them up to be that. But those people who are observing the market around would already see the soft clearance rates. They'd already see the sentiment shifting. If you're on the ground, real estate agents, there are less people that open for inspections. You're seeing fewer people at auctions. You're seeing fewer number of bids at auctions. You're seeing vendor expectations adjusting down. People are hands up, and just please confirm in the chat window if you're already seeing this. There are hands up. Lovely. So yes, people are seeing this already, and I can appreciate that. So we're already into it. You made a comparison to COVID. There was a period of time when the market declined in COVID. Now, we're not seeing that yet in the market per se. We're feeling it on the ground, but the stats haven't come through on that yet. So there'll be a period of time for which we will start to see a decline or a slowing in the rate of growth. But there was, as Simon said, opportunities that came out of the back of that. A similar sort of event is likely to occur. There will be the shock factor and the shock and awe, and then the adjustment, and then acclimatization, and then a stabilization, and then the takeoff again. The way that plays out will take time for us to see, but that doesn't mean we do nothing in the meantime. As smart investors, we take the opportunity to dive into the things that make a difference for us to have the success that we want. And it all boils back down to the numbers.
If we're seeing these things already happening on the ground, and as you say, they might take a while to come through in the stats, but we're already seeing the softer clearance rates. You'll start to see longer time on market, price adjustments, vendors' expectations will shift. They'll start to bend a little bit in terms of their expectations, and you'll just start to feel a little bit less competition. The key here is that the first stage that we'll experience here isn't bargain buying, it's a sense of less competition. And that opens up some levers that you can start to play with here to create opportunities in this environment. And there are really three levers in my mind, Brendan, that come into play here. One obviously is price. Negotiation improves. Your ability to negotiate improves because there's less buyers competing for the same property. You might still have sellers who need to sell, so the motivation's still there. Competition drops away, a little bit of urgency creeps in the mind of the seller, and that gives you some greater leverage on price. So lever number one
time.
Price.
As a buyer, you have a little more time. So for those who are panicked buying in order to get into the market, the FOMO, the nail biting, I hope I get this, is coming to an end, and more time for a calmer negotiation where time is on your side starts to play out. Obviously not in every pocket across the country, but in some pockets you'll start to see it, and it'll creep in more.
Exactly. So what you want to be looking at to try and pick up on that is starting to pay attention to how long a property's actually been listed. Has it been sitting there for a few weeks now? Is it starting to go stale as a listing? You're looking for the motivated vendor, someone who needs to move the property on and is becoming more flexible with their price expectations because of that. The next lever number two, is terms. Often overlooked because people tend to focus more on trying to get the lowest price when they're buying in or the highest price when they're selling. But terms can be as valuable as price in these sorts of more uncertain conditions. So this comes down to things like your settlement timing. Can you get a benefit or save some money, get some planning out of the way, or create greater opportunity for yourself by going for a longer settlement? What about, being able to put down less of a deposit, preserve some of your capital for the time being in conjunction with a long settlement? What other conditions? Due diligence conditions will be easier to negotiate in. If I need to buy some time to check a few things out before I'm fully committed to the purchase, I try to negotiate those conditions. Early access. For instance, if I wanted to start work on a renovation, can I get access to the property prior to settlement? What about for a development? Can I get access to get my consultants, my planning consultants in to do surveys and designs and so on before I settle on the property? Trying to build those sorts of conditions and becomes easier in this sort of environment. So you look at the terms and look at the trade-off between terms and price, and look at different models of price and terms that give you a better outcome. The third lever is really about not relying so much on market-driven growth. If you can see that the growth rate is softening, if it's not as strong, if things aren't quite going as far above auction or even at auction in the areas they were before, what do you do to drive value into the property rather than relying on that market-driven growth? And if your plan, your strategy for property only works when the whole market is rising, then it's like playing a video game on hard mode. You're making things tougher for yourself, particularly in an environment of uncertainty. If you can be more sophisticated in your strategies and actually drive value into the property through, say, renovation, through subdividing land, through doing small developments and the like, then you're creating the value. And as long as you look at the dynamics in the market, make sure that it's not going backwards during the course of your project, that it's likely to stay level or grow at least a little, then building in that value reduces your reliance on market-driven growth in order to ensure your profitability. So that value creation is your third lever. So price, terms, value creation.
But it speaks to the idea of doing your homework. It speaks to the idea of understanding the nature of the market you're going in, mitigating risk. Factor in some fat into the costs required because those costs are likely to continue to climb. We spoke about that last week relative to petrol prices that have gone up and inflationary issues that we're facing. So we need to factor in some additional mitigating contingencies. Then there's also on the back of the effect on prices and the cooling of the temperament in the market. We need to go, the growth that we've been enjoying, particularly in some states, may not be, you can't assume that will remain as it was or grow harder. There's no real incentive for it to go harder anywhere, but there is the capacity for it to calm a little. For those states that are flatter, monitor that or mitigate some of your profit risk by shrinking the period of time between buying and selling. So sell off the plan sooner as a possibility, or do shorter term projects. So if you get in and get out faster, get some efficiencies in your production of what you're looking to build. Getting in and getting out faster will allow you to be observing less time in the market where price volatility may affect profits. Factor in a little bit of resale value decline. So these are the sorts of smarts that you need to apply to your numbers before getting in. And if you're in, these are the sorts of smarts to your numbers that you need to apply in order to know that you're still going to walk away with the profit that you propose, or what differences do you need to make to preserve profit as a concept.
Yeah.
The flip side of this, of course, is being, I don't know what I'm going to do. Let's go on the path I'm already going. Oh, no, I don't know what I'm going to do. Let's hold and play. I know. I'll stop producing my 3-unit development. I'll stop doing my renovation, and I'll sit and wait till it's calm again. That's always the answer I've found.
Except that's exactly then where you put yourself in a position of not being able to act on opportunities. You sit back, other people get ahead of you, and then you look back in 12, 24 months and go, I wish I had. So doing nothing, particularly if it's because you're freezing up, unsure what to do, is unlikely to be the correct answer. So how do we, very quickly, how do we avoid finding ourselves in that sort of paralysis? Yeah. What can we do?
Make an assessment. What has actually changed? Yeah. So remember I was talking about a minute ago, get into the smarts around doing your deal. So my encouragement, do that, because you'll be able to make an assessment of what's changed. When you got in, you had a set of numbers around this. Redo those set of numbers now. Are they different? What's changed? And then forecast to the best of your ability 3 different outcomes: ideal, realistic, pessimistic. And say, okay, well, what are my numbers? Yeah, so what's actually changed is the considerations you need to go through.
Just on that, in terms of what has actually changed, what you're really looking at there is at the local level. So the deal specific level and the suburb level that you're operating in. So there's a comment in the chat. Do we think the war was the 26-27 major economic disaster event? Or do you think there's still another major economic event on its way? My short answer to that is it doesn't matter, because when you're investing, your decisions need to be really focused in on the specific location, the specific type of deal, and the specific numbers in that deal that you're working to and the time frame. That noise and the Harry Dent style apocalyptic economic crisis that's been predicted for the last 50 years and yet never
Only in
actually seems
Australia, of
to
course.
eventuate and destroy the property market. That's not what you want to get caught up in, because if you get caught up in that noise, you'll do what? Absolutely nothing. And that is the worst thing that you could be doing right now.
Well, the flip side of that too is it takes your focus away from whatever you're up to right now. And again, this is a micro position you need to take on. And there is a lag time that exists between geopolitical event on the other side of the world and house price impact here. So while it will happen in the news and you'll hear about it, and the panic can set in really quickly, the actual roll-on effect before it hits house prices or costs takes time. We've got time before it flows on into an impact in real numbers on our deals. So we can risk mitigate a lot of that along the way. And the encouragement is stay on top of those sets of numbers, Simon.
Yeah, which comes back to your point about what's your exposure. So
Correct.
being very conscious and aware of your cash buffers. What have you got in reserve? How sensitive are you to rate increases on your deal? And do you need to mitigate or modify your approach because of that? What about your timeline? How can you control that? You mentioned bringing forward sales if you can, for instance, if you're selling off the plan. What are the other risks? What's your exposure? Just have a really good understanding of that, but then look at, well, what are my downsides? What do I do about it? What do I need to change to contain my risk? And then really, what actions am I taking right now? Am I just sitting back and letting the world go by and just letting all of this noise wash over me and I'm getting lost in it? Or am I taking some specific actions? Am I going in and updating purchasing criteria that I would use in selecting a property, adjusting my minimum deal margins so that I am buffering myself for risk and cost increases and the like? What are my serviceability buffers? And do I need to go and have a chat to my broker about where my borrowing is actually at right now? Results members, are you maintaining every month your Suburb Watch template so that you're keeping tabs on the actual trends within a suburb on the ground in the areas that you're operating in, so that you can adjust your strategy if you need to based on those signals? So making sure you're up to date on that. And just being on the ground, talking to the agents, understanding what's really going on. Those are the kinds of actions that you should be planning and taking, rather than sitting back and, I don't know what to do.
One of the observations that I've seen and is being floated around the country right now, and is coming through in statistics, is the top 25% of suburbs values are actually slowing faster than the bottom ones. So if you're in a high-end luxury project right now, then be on the ground, talk to real estate agents. What's happening in my high-end area? Well, I'm looking to put a 8-figure property back onto the market. How is that being impacted? Versus I'm looking to put a 6-figure property back into the market. How is that impacted? And as Simon said, it's a case of being on the ground relative to what you're producing and the risk relative to your project. These are the things you need to consider. And then you can start to work around that.
If I was to summarize what we've been talking about today in a single line, it would be something like, when you've got uncertainty, you get less competition, which means the clear thinkers are the ones who get to seize the opportunities. And that's who you want to be. You want to be the clear thinker. And recognize that this is creating opportunity and putting yourself in a position to be able to take action on that straight up. If you're feeling that uncertainty or that sense of overwhelm, then go back to that idea of, well, what's one action that I could take over the next 7 days? What's one practical step I can be doing with respect to what I'm up to in the market to focus in on that, get that done? That will help you to think clearly and help set you up for success moving forwards as well. I'd just add, for our results members, obviously we'll be digging into all these sorts of issues and strategies for the current market conditions and how to take advantage of this disruption window of opportunity at the upcoming get together on May the 16th in Melbourne. So if you're in results and you haven't RSVP'd for that yet, that's a really critical session to be at. Make sure you RSVP ASAP and book your travel. Get that locked in right now, and we'll see you there. For our new members in the real estate success community, welcome aboard. I see a number of members have joined just in the last few days. Great to have you here. Hope you're enjoying this session. Please do RSVP for the upcoming sessions for the Property Pulse weekly chats and other events that you'll find in the upcoming event space. Make sure you've set up your profile and put a post against the icebreaker question in the community, just so that you're starting to make those valuable connections with others in the community as well. But welcome aboard. Great to have you here.
Hope you enjoyed the fireside chat. The next fireside chat will be same bat time, same bat station. For all those back in the 70s who watched the Batman way back then. And if you're a lot younger and you don't remember those days, see you next week, same time. Take care, guys.
Thanks, everyone. See ya.